when your home is ultimately earning more than what your income is, it really does place things into perspective. But I think what it also does show is it's leaving a lot of first home buyers behind.
We're a couple of interest rate cuts into the downward cycle with more forecast. What does it mean for likely national house price growth in the coming year?
We are expecting prices to continue to rise across our major capital city, but that price growth is really going to be led by Sydney, and we're going to see Melbourne even moving to a pricing recovery. That has been a very subdued market over recent years. And even in those hot markets such as Adelaide, Brisbane and Perth, where they've really been overperformers in recent years, we still are expecting price growth over the next financial year, but that pace of price growth is going to start to slow down.
What is behind the turnaround in Melbourne's market?
Melbourne's been a fascinating market. Overall, supply has been much higher compared to other capital cities, which has really weighed in on price growth. But I think what we've got now is really an undervalued housing market relative to other capital cities. If you rewind 5 years ago and look at the price comparison between Melbourne and other cities like Brisbane, Adelaide and Perth, they were 35 to 45% cheaper than Melbourne. And today, they're pretty much on par in terms of that price point. So I think that value that has built up over time in Melbourne's housing market is really going to bring demand back into Melbourne. And also we tend to find that when the cash rate is reduced, it seems to be amplified through our bigger, more expensive capital cities quicker than others. And so we're expecting Sydney and Melbourne in particular to react to that reduction in rates and the further reductions that we're expecting for this calendar year.
I was going to ask you about that in relation to Sydney in particular, because we've been talking a lot about affordability issues, particularly for first home buyers, and yet you do see the Sydney market as somewhere where first home buyers in the next 12 months are going to increasingly be able to access.
Obviously, a reduction in the cash rate does improve borrowing power. And when you look at a 100 basis point reduction overall in the cash rate, it means that the average Australian can borrow about $100,000 more. So that is a real big difference in borrowing capacity and can mean that perhaps some buyers might be able to afford that 3-bedroom rather than that 2-bedroom. I think with Sydney, though, affordability issues are really entrenched in Sydney's housing market. And we've got an expectation that house prices are actually going to surpass $1.8 million over the next financial year. I think for first home buyers it is still a very challenged market, but we have to remember there are expanded first home buyer incentives from the government, which is really going to help some become homeowners. And I think what we'll likely see is those affordable pockets, so think outer suburbs in Sydney, and also unit prices in certain pockets are probably going to perform better than others.
Just briefly, we should touch on Domain's forecast that annual gains for houses in Sydney will exceed the annual average full-time earnings in 2026. That is a forecast investors will no doubt be very happy to hear.
They will absolutely be very happy to hear that. When your home is ultimately earning more than what your income is, it really does place things into perspective. But I think what it also does show is it's leaving a lot of first home buyers behind, because when you've got a figure like that, it's really hard to keep pace with the housing market.
Nicola, where is price growth likely to be slowest, and do you expect to see prices retreat anywhere?
We're not forecasting any declines in prices overall for our major capital cities, but what we are expecting is much slower rates of price growth coming out of Adelaide. The slowdown in momentum is very evident in Adelaide as well as Perth. We've got to remember that these have been very hot markets over recent years, and there is still a little bit of momentum in these two housing markets, but I really think affordability is starting to catch up with those markets, and it is starting to slow down the pace of price growth.
Just finally, what does continued price growth mean for national rents?
So the rental market is still challenged. We're starting to see conditions ease across the rental market, and I think what we're likely to see as prices rise, that also brings investors back into the market, and we have seen investors rise. So I think what we're seeing across the rental space, it is starting to balance out, but it's still very much a landlord's market. But my expectation is the rental market is going to be better next financial year than the current one.
Nicola Powell, thank you for joining the program.
Thank you.